The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 14th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential is something we must master each and every day. So let's begin with a few empowering beliefs. The first one, brought to us by Henry David Thoreau, goes like this: go confidently in the direction of your dreams. Live the life you have imagined. That is a way to live, folks. How about the next one, brought to us by Harriet Tubman? She went on to say, every great dream begins with a dreamer. Always remember, you have within you the strength, the patience, and the passion to reach for the stars to change the world. Folks, at least change your world out there. And then lastly, let's see. Lastly, I don't know who this is from. Maybe this is a little Steveism. I don't know. The question for each person is not what they would do if they had the means, the time, the influence, and the educational advantages. The question is, what will you do with the things you have? Why? Because, folks, you have an amazing power within yourself. Let's go check out the amazing power of these markets. Right now, we've got the Dow down 47 points, S&P off 2. You've got the NASDAQ is down 3 points. Russell 2000 is flat out there. NASDAQ 100 off a couple of points. New York Stock Exchange, not a lot of movement there, not a lot of conviction to the downside. That's up 9 points. So we know where the weakness is. The weakness is inside the Dow. There's no question about that. The strength is inside the NDX 100 out there. Well, of course, the strength, you could say, is really in the silver market, and that's up 1% today. That's up another 23 pennies. Gold, a little bit lagging out there, but that'll join in. It already has really joined in. It'll join even a little bit more. Right now, net declining issues in the New York Stock Exchange, down 357. Need about 1,778, 79, 80 in order for the bulls to take control of the marketplace out there. I don't see that occurring, but that is at least is a number that we need to be watching for. So let's start off by taking a look at the indexes. We'll look at the ETFs, try to get some signals out there. Our call number is 877-927-6648. If you give us a call, we can take a look at your stock chart, try to answer your question. And we're starting off by taking a look at the strength in the marketplace. No, not silver and gold just yet. We're going to take a look at the index strength out here, and that coming to us from none other than the NDX 100 out here. The NDX 100, what did it do yesterday? It completed the 1-to-1 A to B equals CD. The number, 3147.53. How'd we come up with that? Well, we used our lightning bolt, our A to B equals CD pattern. The A point being the April 18th low, 2730.97. That's your A point. Your B point down here, or up here, I should say, May 22nd high. That's 30.53.51. Makes a retracement. What kind of retracement? I don't remember. Let's go look. 0.786, 0.618, somewhere right around there. There it is, just below the 0.618 retracement as it comes into a rising trend line. That's the trend line coming off of the lows from November of 2012 out there. So it hits that trend line, makes the 0.618 retracement, forms the C point of an A to B equals CD up on June 24th. Again, that low, 25.18. If you take those three numbers, because the market's done the work for it, it's done 75% of the work for you. That gives you a projection of 31.47.50-ish. 53 is the number. Of course, if I explode it, it'll probably change. 31.47.85. So I got to be careful. This tool here will go ahead and adjust depending on how I blow it up. But just take a look at the line going across here. And what it hit yesterday was 31.49.25 out there. So it completed the 1-to-1 move. Now, the question is there enough energy to actually go higher? And if it goes higher, where would that next level be? Well, I'm glad that you asked me that. Let's actually go figure that out here. Let's go ahead and go back to, let me see if I do this, if that'll work. No. There we go. So the 1-to-1 is in that 31.47-ish range. That's what it hit yesterday. The 1 to 1.272, that'd be 32.35. So if we don't see a reversal, and in the NDX 100, here's what we've got to be paying attention to. It is not overbought. It was overbought, and it got into the overbought stage back here on August the 5th. But since it just simply traveled sideways here since that time frame for a week, it worked off an overbought condition. So it does have room to run to the upside. If we take a look at expansions of swing points, that would be your B to C swing points out here. We'll take a look at where's that Fibonacci expansion come in. Well, the 1.618 number is 3194. So if we do see a move above 3150 inside the NDX 100, the target area is going to be 3194 to 3235 out there. We'll know where that target area when it completes when we see the bears show up. And that's something that we're going to be paying attention to today, because it wouldn't take much in order to get a bearish reversal signal today. The bearish reversal signal would be a bearish engulfing, and that would be a close below 3130.08. So on your pad of paper out there, go ahead and write that down. You want to take a look at 3130.08 out there, because that would be your bearish engulfing. Right now we're at 3133.37. We want to be watching what's going on inside the strength of the marketplace, just as we want to watch, take a look at what's going on inside the weakness out here, and that would be the Dow, and that continues to show its weakness here today. If we take a look at the Dow, that is trading out right now at 15,391. Where does the Dow want to move down to? Well, I would say it at least wants to come and test the trend line. That's a trend line coming off of the November 16, 2012 low out there. So that's going to take us into the range, most likely. I would say the high of the downdraft from June 20th, 15,105. If it breaks that trend line, what is in play is most certainly the June 24th low, 14,551. So that is where weakness. But, we're really not going to get a ton of information here. Well, I mean, we might get a ton. We might get some information from the Dow. The information would, quite frankly, be a total rejection of the May 22nd swing point. It's trading inside the lower part of the range, meaning below the high, which was 15,542. The low, 15,265.96. That would be some conviction to the downside out there. So that combined with the NDX would be the two things that you would need to know, because the New York Stock Exchange has said, hey, bears are in control of the marketplace. Let's go out to San Jose, California, to John. John, thanks for calling. Thanks for holding. How are you this morning?
I'm doing great, Steve. Thanks for taking my call.
My pleasure. You wanted to look at the Gold Vector Miners Trust, the GDX out there. Tell us what you're doing and how I can help you.
I'm planning to, buy this. So for long. So I want to get your guidance. It's popped up this morning. So what's your feeling about the right price to buy it? Can I wait so that it can come down to 20 to 24 range and then buy it, or want me to buy it now?
Well, it's a great question that you have out there. Let me ask you a question as well, because do you follow any of the first question I would ask you is, do you follow any of the other individual gold stocks or some of the components of the GDX? Is that anything that you've taken a look at? There's no right or wrong answer. Just trying to get some additional information from you to help you to maybe answer the question that you've got for me. So have you taken a look at some of the components within the GDX?
No, not yet.
Okay, so that's the first place. That's the first place, John. That really, in order to answer the question that I'd like you to start with. So I'm going to try to do this here. Let me see if I can get over to. I'm just simply going to go to Yahoo, because that's an easy tool. Now it's not going to be updated as well, but you can type in the GDX and you can go to the Gold Vector Miners Trust. But if you go to Yahoo Finance, not pushing Yahoo Finance, but if you go to it over on the left-hand side. You'll see you can enter the symbol GDX. If you on the left-hand side, you'll see a button that says Holdings. As I say, it's not updated, but updated to date. You actually want to go to because in fact the holdings here it says are updated as of July 30th. But as of July 30th, what you've got inside there, the top 10 holdings go like this: Gold Corp is the number 1, Barrick is the number 2. Again, this is as of July 30th. Newmont number 3, Silver Wheaton number 4, Rand Gold number 5. So let's just start with that. So The first question as to whether you should buy or not, and by the way, the of those top 5 holdings within inside that ETF, John, that represents, it looks like, let me add this, 24, 34, 44. So probably somewhere above 45% of the entire weighting inside the GDX. The top 5 holdings are almost half. So that's why you really want to understand what's going on inside there. And then what you're looking for, when you want to buy something, this is the way that I take a look at it, and maybe something to consider. When you buy something, you want to be buying something that's strong, and you want to be selling something that's weak. Like right now, we talked about the Dow, or I spoke about the Dow. That's weak. I wouldn't be selling the NDX 100. That's strong out there. I'd be looking to buy an NDX 100, for example, if that were breaking out. Well, inside the GDX right now, its swing point is July 23rd that it's trading into. So as you said, it bounced up this morning. There's 39 million shares there. The high is 28.35, but it hasn't been able to take that level out. Now, 39 million shares. When it gapped up a couple of days ago, gapped up with some nice volume, 49 million shares. Should have been able to get up above that. Yesterday, the pullback on 36 million shares, not too shabby, at least light volume pullback. And today, up with 7.2 million shares in 45 minutes of trading. So not too shabby. But what I think that you should do is just take a look at the top 5 holdings out here to get an idea. And that idea would be take a look at Goldcorp. GG is the ticker symbol. So if we go take a look at Goldcorp out here. Remember, July 23rd is what we're benchmarking. Well, July 23rd is what it's trading into as well out here. Has not exceeded the swing point, and it's trading into that swing point. That's got 9.7 million shares. It traded up into there with 10 million shares. Not tremendously. It was accelerated volume, but yesterday the pullback on 6.5 million shares. But the number one weighting, which is about 15%, is still struggling to take out that swing point from July 23rd out there. Let's go take a look at the number 2 holding in here. Let's take a look at ABX. ABX, Barrick Gold. ABX is the ticker symbol. Now, ABX, interestingly enough, if we take a look at the July 23rd swing point, it's up above that area right now. That has 20 million shares. It came in there with 22 million shares. Today, so far, it's done 4 million shares. So this today could be confirming an A to B equals CD up, which is powerful. The GDX itself may not confirm that today. So if you were going to buy today and ABX, Barrick Gold, now I haven't taken a look at it further back, but if you were to take a look at Barrick Gold, if it closes above 18.15 and it's trading at 18.40 right now, and it takes that out with 20 million shares, this would have a move up to 20 and a quarter, maybe 21.53. Maybe you take a look at buying Barrick Gold as opposed to the entire GDX out there. Newmont Mining is the third one. NEM is the ticker symbol. And I think what you should do, John, what would be a good idea is to go take a look at all of the holdings with inside there, and maybe as opposed to buying the entire index, you would go ahead and try to find the strength. Or maybe what you would also do is go take a look at, as you go through the holdings, you're going to find that there are some stocks in there that are very strong. For example, number 5 in that group is Randgold Resources. GOLD is the ticker symbol. That is up above that swing point here from July 31st and from July 23rd out there, and it's doing it with some volume. Does that help you out?
Yes, Steve. It definitely helps.
Go ahead and stay on the line. We'll go back to John when we get back from this break. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is off 47. S&P is off 3. Goldilocks is up $9. Silver up 30 cents. We're going to go back out to San Jose, California, to our caller, John. He's taking a look at the GDX. That's the Gold Vector Miners ETF out there, and he's taking a look at trying to find a place to buy that. Now, you know, John, I own the GDX. As well as maybe 7 or 8 other mining-related stocks that are out there. Of the 8 that I own, the GDX is one of the least performing with regard to being out there. And that's why I was just kind of trying to move you in towards taking a look at looking for, if you're trying to buy something, sometimes what you want to do is you want to find what's the strongest thing out there, and maybe instead of chasing something, is wait for it to actually pull back to you. I'm in at a much lower price than $28. I'm tightening my stops right now in case there's any kind of a pullback, just simply to protect my profit. I've never been one that's been really great at trying to chase a market. I'd rather be sitting in the weeds waiting for something to pull back, into a buy area out there. And that's really what that's in essence what that conversation was all about this morning. But look, I do want the GDX to break out. I want to see it get above 28.35. I want to see it do it with more than 40 million shares, but that's because I'm in it long, but at much lower price. So to answer your question, I wouldn't be adding to my position here to add to it. I'm just tightening my stop as it's moving up. So that's where myself, in giving you some advice, I'm in a little bit of a, I suppose, a quandary. Now, not so much a quandary because I've just laid out to you exactly what it is that I'm doing. Does that maybe help out even a little bit more? Or tell me what question that you've got that, that I didn't answer, or something that I've said that has given you another question.
It was another question, Steve. So the tapering talks are, coming up shortly, right? So my understanding is that will have a negative impact on, the gold miners and gold, right?
I'm sorry, what's coming out that will have a negative impact?
The tapering talks.
I couldn't hear you. I'm sorry. Could you say that once more? Uh-oh. I think I lost John. Maybe he was on a cell phone. Maybe John can call me back. I do apologize. I didn't hear what he was saying. Al looks like he's going to, we lost him. So I did not hear his question. But if he calls back, we'll go back to it. In the meantime here, let's go check out. I had some questions in the den. I was talking about Simon Property Group earlier. So and I'll just get back to the GDX, folks. In order to, I'm in the GDX. As I said, I'm in a 7, 8, I think 8 other mining-related stocks. The GDX has been the one of the least performing of the group out there, and the reason is because it's got the laggards as well as the ones that have broken out, and it's the ones that have broken out that I'm eyeing as equities that I want to be able to add to positions on some type of pullbacks as opposed to adding to that. So in any event, let's go take a look at, because there was a question earlier inside our Tiger's Den. And folks, before I even go to the Tiger's Den, tonight here at TFNN, there's an event that's taking place that you absolutely need to make a must. Even something even more than that, the must is go over to the homepage of TFNN.com. Do you realize the opportunity that exists for you right now? An opportunity like nothing ever before. You can actually access. Yesterday I talked about the 4 different characteristics of every stock chart. There's 4 different characteristics that it would be very helpful for you to learn how to measure. Those 4 characteristics being the momentum, velocity, speed. That's one characteristic. The second is the energy or the angle, and I think the best tool out there, and there's plenty of tools, but the best tool is the power law vector indicator. The third aspect, volume. I take a look at volume bars, supply and demand, but there's plenty of other volume tools out there, and then liquidity out there, volatility. Those are 4 elements of every single characteristic of everything, every single chart that you should be looking at. Well, you can get the art of timing the trade charts for $1. $1. And the offer ends today. The offer ends right now today. This evening, there's going to be a workshop that both Tom and David are going to be hosting. But do yourself a favor, the largest favor that you could do. There's no gimmicks. There's no nothing. $1. $1. Please take advantage of it. Every single person. I don't care if you're using. Look, I use 3 or 4 different charting packages. And one of those packages that I use is the art of timing the trade charts. I've used that from the very get-go, from the original program that was out there. In fact, not only did I get one version, I bought 2 licenses to work on multiple computers out there. So please, the workshop will be archived, I believe. I'm sure it will. All workshops are archived here. But do yourself a favor, $1 to use that software for the next 30 days. That is the best value. John, if you're listening, go get that. Don't worry about GDX. Go do that out there. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off 45 right now. Russell 2000 up by 12 pennies out there. Apple leading the charge, the upside up $9. Chart Industries, GTLS up about $8. Netflix up 4. Actavius, it's not Actavis, ACT is a ticker symbol, up 2.5%. Cree down with volume off $15. That's down 20%. Google's off about almost 1%. I should say this morning, down about $8. Silver Spring Network, that's off 22%. That's a nasty one. X1, that is off $6.5. I'm sorry, $5 off 6.5%. Now, earlier, I had a question because we were taking a look at the Simon Property Group. It may have been during the end of the last show. In fact, I think that it was during the 9 o'clock show. And the question was, is taking a long trade in SRS, which is a 200 or 300% ETF for the Dow Jones real estate marketplace out here. So what we're going to do is, just as I did with John earlier, I would never ask you to do anything that I wouldn't do, such as going ahead and taking a look at and owning for $1 the art of of timing the trade charts out there. So I'd never ask you to do anything that I myself wouldn't do. And when it comes to technical analysis, I suggest to use an assortment of tools out there. Even during the workshop or during the day, during the shows out here, I'm not showing you each tool that I use, but showing you plenty of tools that you can actually use. If we go take a look at the IYR, so if you're taking a look at SRS, for example, you'd want to go take a look at, again, the top 10 holdings that are out there. Because in the case of the IYR, Simon Property Group is number one. This is through 2 days ago. They represent 8% of the index. American Tower is almost 5%. Public Storage, about 4%. HCP, 3.5%. Ventus, Prologis, about another 3%. But if we added up the top 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, that's going to be 3, 6, 9, 12, 15, 18, 21, 25, and 11. So it's going to be probably right around 35% or so, right around there, is what the top 10 holdings inside that ETF. And so you really need to understand what's going on inside the top 10 holdings. Now, if we start with the IYR itself, the IYR itself gave you a nice big reversal signal. And it did that on the trading session of May 22nd. So just like the market, now take a look at how weak the IYR is compared to the market. Because right now we're dealing with talking about the Dow being in the lower part of the trading range. It's the only index right now that is, which is below the May 22nd high. You've got the NDX, which is over it. The S&P is even over it. Composite most certainly over it. The Russell 2000 is certainly over it. So certainly the IYR would be a place where you'd be looking to sell with it because we've got weakness out there, right, versus the strength. So it was a great question to say, hey, should we take a look at SRS or selling the IYR or whatever is within inside it? Because that makes all the sense in the world. Just take a look at what it's doing compared to the rest of the market. Now, you had that big bearish engulfing candle, key reversal session, divergent pattern between the relative strength as it made its move up there, and that was anywhere from the 76.21 to 73.33 out there. That was the day or the day after that when you could have taken a short position inside the IYR, just simply because of the signal. Now, what it has done, it's made a nice A to B move, and that A to B move takes you from that high of May 22nd. The B point that I would use on this is June 24th. June 24th is where we're going to get a ton of information about the market. We certainly get information as equities, or how about as weakness pulls back into that area, because this certainly is weaker than the overall market. So this can, just tracking the IYR will help us to understand what's going on underneath the covers out here. Now, the IYR, that has a high volume low on June 24th. The low there, 62.71 to 65.43. It's trading inside there right now. In fact, on your stock chart, you've got a line tool. You ought to go ahead and put a line across the top of that candle session from June 24th. The other thing that I would do is I would put a line across the volume. Now, what we can see about the volume as the IYR weakness coming into this area, and it's a big A to B move down. So you certainly want to get the timing of this correct, because that move down goes from 76 as the high down to a low of $62. So you've got, what, a 14 point move out there. The SRS, if it's a 200%, you're looking at twice that, or approximately twice that. So you want to get the timing of this right. Now, as the IYR has come into this area, which it did yesterday, the conviction behind the move was only 10 million shares. Certainly accelerating volume versus the prior session, but only 10 million going into 30 million. This is telling us it's not enough to probably crack the lows. So right now, I would say just looking at the IYR, the SRS would be a little bit too early to go ahead and take that trade. Now, it's trading inside that candle. So the real release of information doesn't come to us until it gets to 62.71. But the information that we have thus far tells us what? You're coming into a high volume swing point with lighter volume. Even today's volume so far, with an hour and 9 minutes of trading, 4 million shares. If we straight line it, that would be maybe about 20-ish million shares, 24 tops. Still lighter than the 30 million shares. And I don't expect we're going to see volume accelerate right now between now and the close out there. I don't expect that. If it happens, it does. But I'm not inside this trade. We're just analyzing the trade out here. But right now, the IYR if it tests the low, it will bounce. And if it bounces, where could it bounce to? Well, any bounce would be a normal 0.618 retracement. So that would say, maybe a sell on this might be in the 66.95 or the 68.12 level out there. We can see at least that it's moving down into that oversold condition, utilizing that relative strength indicator out here, so it bounced sideways. So I'd say the IYR says, hey, just a little bit too early. But now we've got to go take a look at what's going on under the covers out here. And under the covers, we took a look at Simon Property Group. I don't want to go through that again. We already did that. You can get the archive of that on Channel 9. But let's take a look at the second weighting, which is American Tower Group. AMT is the ticker symbol. Let's see if we can get some clues out here from the largest weightings in here. Now, in this case, if we come back to June 24th, it's already traded below that level. Again, the ticker that we're looking at is AMT. So let's go searching for clues as to what's going on out here. In this case, I'm going to draw my line across the low of the chart since that has already been broken. And let's go see what AMT, and this is important to see what the number 2 weighting is doing here. So that June 24th low out here wasn't a high volume low by any stretch of the imagination, was 4.4 million shares. Nonetheless, the American Tower Group, price got below it with 4 million shares. So it was 4 million going into 4.4. Okay, how about the next trade down, that little doji candle that it created here, which was on August the 8th, was 4.7 million shares. And then on August the 9th out here, you did have a bullish engulfing as well as this set up a morning star pattern. So real support inside the second weighting inside here, meaning that you won't really see much more of a breakdown, is going to be the low of that doji candle out there, 68.04. So this is a powerful reversal move. Now, you got the candle. Did you get volume behind it? You got 5 million shares pushing to the upside. Yesterday was pushing down with 3.5 million shares. So it seems like volume to the downside right now is lightening up here. But what we do have is, you've got 4.4 million shares, the close below it. We still haven't seen a close below it with more than 4.4 million shares. So you don't really have, in this case here, a breakdown or a confirmation of an A to B equals CD pattern. Where could this thing bounce to? Maybe it bounces all the way back up to that 200-period exponential moving average or so. But you do have a bullish reversal signal on the second weighting inside the IYR. Let's just take a look at the third one, public storage. Then we'll stop there and take a look at some of the other markets. But this is the type of work that you ought to do, and one of the great tools to be able to use for this is the art of timing the trade charts, because here you'll be able to remember, one of those indicators is going to be energy. What we've been looking at here has been volume. That's just one thing that you want to look at. You also want to understand energy, and the only place to get that power law vector indicator is on the art of timing the trade charts. To me, that is there's a lot of great tools there, such as being able to have the scan 5,000 stocks or so to give you which Gartley's or butterfly patterns are setting up. That's a time-saving tool as well. But also understanding that real strength of the move down, that is extremely helpful. Now, if we take a look at public storage out here, PSA is the ticker symbol. It's got to be right here in front of me. There we go. So let's go see what the number 3 weighting structure inside the IYR is doing. And if we take a look at this is actually a bit stronger than the first two, right? Simon Property Group and the IYR. The low down here is on June 20th versus June 24th out there. Let me just make sure I've got all of the date out here. This is traveling out at 159.63, and this has actually got some support out here, and the support is going to be a gap up on July 11th. It's only been tested once, but that test out actually hasn't even been tested. We have got to draw a line across the screen. Price has not made it down there. So the number 3 weighting inside here had a little bit of a breakaway. It had that key reversal session on May 22nd. We'll see that in all of them out here, but I'd have to go turn on the power law vector indicator, and the only reason I don't run it during this show is because of all of the things that I have running, and what I can ill afford is a crash. And my laptop can only handle so much, and not that it'll crash my system, but I'm very, I limit what it is that I power up while I'm doing the show, because there's nothing worse than being naked, which means having nothing to talk to you about other than things I enjoy talking about. And so that's the only reason why it doesn't run here during the show. But when I log off from the show, I power up that as well as some other tools that I like to use. But in the case of public storage here, it doesn't look too shabby out here. It's not exactly broken down like the other two's charts. And my conclusion here on the SR TRS and the IYR. It's a bit too early and wait for a pullback out there. So hopefully that helps you, at least with regard to how I analyze, a stock, a chart out here. Now, what I think is most important for us to analyze today is really the general markets, and we do that by taking a look at. We got to take a look at that sideways consolidation that we've been traveling in, that the ES has been traveling in, and until it busts out the lows, which are 1672, we're just in a sideways market. Now, you can make a ton of money in a sideways market because you can play the extremes, and you can also exit early if it starts to break away from that. Then you can play a momentum move. So we're looking from anywhere from the 1670s up to the 1695-ish area. What I will say is 1695 is really the ish, because yesterday's high was 1694. So shorting positions are coming from about the 1694, 1693, 50 kind of area out here. So that's where I would be looking to put on some short positions if you were playing this consolidation pattern. Let's see, we've got another caller out here. We've got Lou from Nashua. Lou, thanks for calling. Thanks for holding. And you were going to ask about the E-minis, so how can I help you there?
Right. I was thinking of, probably wrong, going long.
I'm sorry?
Thinking of going long here for a day trade.
Long. Okay. So you're thinking of going long for a day trade. So right now, as we take a look at the ES-mini on the 120-minute chart, you're kind of like in the your midstream. So now is probably not the time to take a long trade. But let's go look at the 30-minute chart for you. See what we've got going on the EKG system out here. And on the 30-minute chart, the relative strength, just like yesterday, was a little different story. And the different story yesterday with regard to the long trade that I entered after the show was the fact that the market had pushed down and it got into that extremely oversold condition on that relative strength indicator. We're not there yet. So, in fact, the RSI is at a reading of about 39. It needs to get below 30, and then you've got to wait for some type of reversal signal. You see, I didn't buy the bottom tick, Lou. I didn't buy it at 1679. In fact, if I look over to another screen of mine, maybe I can see where I actually bought it yesterday. The price was at 1682.75 was exactly where I had bought that. And you can see the low here yesterday was at 1679 and a quarter out there. So the market's pushing down as far as you need to let it get into an oversold condition, and then you need to start taking a look at reversal type signals out there. Right now, it looks like what this wants to do is pull back to probably the 0.786 retracement, which is 1682. But that's just an initial target right now. Maybe it's going to make a 100% move of a move and get down and test the low of yesterday at 1030. And if it can test that on less than 214,000 contracts and reject that, that would be a rejection of a swing point that is held thus far. So it's too early to try to take a counter trend long position inside the ES Mini. I hope that helps you out.
Yes, as usual.
Absolutely.
Thank you.
You betcha, you betcha. So as far as other things that we want to really pay attention to today, I can't understate this one. And that is that we need to be paying attention to the strength inside the marketplace. Weakness, that's already here. As I mentioned in Dow, you get a close below 15,265.96. That's conviction behind that move. That'll be below the low of May 22nd. But what you really want to be paying attention to is going to be the NDX and the Qs. So we'll do both the NDX and the Qs out there for you. In the NDX, what you're looking for, which is already what we have, but the day is young. It's only 10:48. And we got Basel coming up here in just a few. You've got a bearish reversal signal. You got the bearish engulfing candle. You'll get that if you get a close today below 3130.08. It's trading at 3126 out there. So that would be the first thing that you would be looking for. If we go over and take a look at the QQQ, and see what patterns we have setting up over here, we should see the same thing with regard to reversal signals, and that reversal signal would be a close below 76.77. It's trading right now at 76.74 out there, and that would be an indicator. Now, would you go short the Qs? That's not what I would recommend. My recommendation to always go ahead and short something that is weak, buy something that has strength in it when you get those reversal signals out there. 877-927-6648. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 94 points right now. S&P down 7. And if we take a look at what's going on inside the week index out here, the Dow, you've got only 4 of the stocks are slightly positive. We got Alcoa, which is up 1 penny. Merck is up 11 cents. Bank of America is up 14. J.P. Morgan is up 25. Otherwise, everything else is in the red. Leader in the clubhouse dollar-wise to the downside is Johnson & Johnson, Boeing right behind them. They're off $1.29. Home Depot's off $1.12. United Technologies off about 98 cents a dollar. Chevron's down 90. 3M is off 84. Microsoft down 50 cents out there. So everything else in the red. If we take a look at IBM continuing to go after the support level here, which is the April 22nd swing point, that low 187.68. Volume there, 10 million shares. On the way down, that is held as support. It doesn't have the volume, has not had the volume to bust that out. I sure hope it does bust it out. Well, one, because I'm short the Dow. The second is I want to see IBM, what happens when it gets down into this original breakout area, which takes us back to the January 19th, 2012 time frame, up at the 182.36. Now, I've been waiting for this pullback for a long time, and that doesn't mean that that's where it's going to stop and hold, in that pattern. And it's a nice consolidation, a really nice consolidation. So we'll see what happens as IBM moves down into that level. If it does hold the 182 mark, you take a look at 182 on a nice name all the way up to about 212. So what are you looking at? About a 40-point move inside the stock. Likewise, if that consolidation gets broken, that's the other nice thing about this. Remember, it's both sides of the trade that I look at. I could care less what the market ends up doing. I just want the information so that I can then go ahead and place the next trade. So just as this is a 40-point consolidation range that it's been in for, all of 18, 19 months, whatever it works out to be, 20 months, something like that. If it breaks that, it's 40 points to the downside, minimum of 40 points to the downside. That would take it down into the 140-ish range. And you've got some volume down in that area. That would be all the way back into the August 2011 lows, a little bit lower than that, quite frankly. But that's what IBM is doing. If we go take a look at Exxon Mobil, I believe I've got that chart inside here. Exxon Mobil, that broke out of a trading range, broke back inside it, and that says Exxon Mobil wants to go all the way back down to the bottom. That was a $7 trading range. It was a false break. It is below the 0.786. It's right now making that 100% move of a move, which means coming back into the swing point from June 24th out there. Another one back at June 24th. That had 17.6 million shares. Yesterday, as it moved down into it, with only 10 million shares. So, it says we might be in more of a consolidating market than one that's just going to fall apart here just yet. So far today in ExxonMobil, 2 million shares. Again, at 2 million going against 17 million shares. Not going to have enough to bust it down, not unless we see some real selling come into the market. And let's face it, that could happen at any point in time. But the number that you're looking for inside ExxonMobil is going to be that low from June 24th at 88.02. But looks like Exxon, one way or another, is going to trade back into the $84 range, $85 range. That's a nice $7 trading range. If that area holds, that becomes a fairly nice buy out there. So today, what you want to do is pay attention to the NDX and the Qs out there, see what kind of weakness, what kind of reversal candles that we get, if any. Right now we're looking at, inside the Qs, it'd be a bearish sash candle. Inside the NDX, it would be a bearish engulfing candle. So we've given you the numbers there. In order for the bulls, they would have to really stage a reversal. But for over 2 weeks, New York Stock Exchange has said, problems under the covers out there, and the Dow leading things down. But leading off the next hour, that's Basil Chapman. So stay tuned for Basil. Have a great Wednesday, folks. I look forward to seeing you in the morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.